Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome back to Financial Issues, everybody. Good to be here with you this morning. Seth Udinsky, Samuel Case, the Studio A team at FISM. Happy to be here this Wednesday. Grateful to have each of you. We're live this morning. Be here for the next hour. Thanks for choosing to spend your Wednesday morning with us, folks. On today's show, we've got Mark Minnella, financial issues contributor, financial expert. He's going to join us later in the show. We'll hear Mark's expertise on the U.S. government's interest in buying up stock in publicly traded companies. We talked at length about that yesterday, and I'm excited to hear what Mark has to say about that. We'll talk about some other things as well with him. Also, yesterday, President Trump made an offhand comment about a certain controversial food service corporation. And then actually that food service corporation happened to reverse its very controversial decision, which is kind of funny. The controversy is not so much what we're interested in. I think we're excited for the outcome, but more the fact that what Trump said made the stock jump by 5%. We'll talk about that in a little bit. Your questions and comments. Also, can the president actually fire a Fed official? We'll talk about that a little bit if we have time later on as well. Hey, there's partner commentary out this week, folks. You got to check it out. It's great commentary. Make sure you go read that if you are a partner. And if you're not one, become one today at financialissues.org. Just click that Become a Partner button. Now on to the show. Sam, you ready to roll? Ready for some fun?
I guess so. If I have to. You're making me do my job.
I'm making him work, and work is fun. This work is truly a lot of fun, so it's good stuff. Sam, let's start here. The Trump administration continues to wheel and deal on the world stage, specifically in the Far East. What can you tell us about the investments made from South Korea into the United States?
The winning continues, Seth. Yep. Raking in those sweet, sweet dollar bills. South Korea touted $150 billion worth of U.S. investment plans during Monday's summit between President Donald Trump and South Korean President Lee Jae-myung. These investments span several sectors, including shipbuilding, nuclear energy, aerospace, energy, and critical minerals. By the way, those investments could reach as high as $350 billion. That's part of a broader plan that right now is just agreed to on paper, but could become real very soon. Meanwhile, the White House also says it will announce a $550 billion investment from Japan later this week.
Good stuff, Sam. You know, compared to what we discussed yesterday, and again, we'll talk about that with Mark later in the show with what the U.S. government did in buying up Intel stock, I like to see this. This feels different to me, Sam. This is the U.S. government doing what it should do, far better in these types of what you could call investments, as these are going to accomplish what Trump has touted with his America First agenda without taking steps toward socialism. I think this is the way to do it. I really do. This is also going to help the United States, Sam, furthering its interest in this ongoing Cold War with China. Anytime we can see a deal made with a country within the vicinity of China, I think that's really good. Even if it's a country like South Korea, which we know we've had warm relations with. You mentioned Japan also, Sam. I think that's kind of expected, but I also think it's a good thing. And as we can see China isolated more and more, that's really good. It's America first. That's what we want here. My hope is that this is what the U.S. government puts its efforts towards, as opposed to buying up stock in companies and driving the price up with those companies. So.
Yeah, I mean, it appears to be this is the general rule, as the Trump administration says they've already have something like $10 billion worth of on-paper investments. We'll see if all of those come to fruition. But if history's correct, then at least a good portion of them will be, about 80%.
Yeah. Good stuff. So appreciate you bringing that up, Sam. Elsewhere, Sam, we did see consumer confidence come out. Kind of went under the radar because of everything that's going on this week with the continuing battle between the White House and the Federal Reserve, as well as that big earnings report from NVIDIA that's coming out later today after the bell. But we did see consumer confidence dip, Sam. What can you tell us about this one?
Yeah, dipping 1.3 points to 97.4 in August. That is staying in line with expectations. But Americans' short-term expectations for income, business conditions, and the job market, those fell by 1.2 points to 74.8, and anything below 80 could signal a recession. Not necessarily, but that's how the American people are feeling about the current situation. That drop comes as the U.S. has seen significant downward revisions in jobs data, along with hotter than expected wholesale inflation.
Thanks for that, Sam. You know, of course, anytime we talk about recession, we do have to give the disclaimer, folks, of what are we actually referring to with a recession recession because are we using the traditional definition of a recession or the Biden administration's amendment to what a recession is? Because apparently we saw a recession with the Biden administration, but of course it wasn't reported as one. If you want more info on this one, folks, I think it'd be good to refer to last week's commentary. I believe it was from August 19th. Real good information on this specific topic here. While we're talking about that, yesterday's commentary, also a really good one for you to check out if you're wondering about where we're sitting as a strategy right now. The long-term strategy is not changing at all, but every week with the commentary, we get little updates here and there, on some things we can be considering, what to do with cash, what to do with money that we're ready to put to work, how much powder you keep dry, all that stuff. And by the way, when we refer to dry powder, again, folks, that's kind of a euphemism that we use to just talk about cash that has not been invested. So if you're hearing one of us say, keep some powder dry, that means keep some cash handy, stuff like that.
Oh, I thought you meant keep your flour dry because then it doesn't make baking so good if it's wet.
That's exactly right. That's actually right. I wouldn't know anything about that. But my wife's been into the sour bread game a lot, Sam. So I'm sure she'd be the expert on that sort of stuff. Cool stuff, Sam. Well, let's get to a question we got from the chat yesterday. We didn't have time to get to it, but this is a good one from Brian and Kara. What are they saying? Yeah, they're asking about the rising trend of buy now, pay later finances. And the simple question is, how do people move forward with that kind of debt mentality? I think the answer is they don't. Yeah, right, Seth? You're exactly right, Sam. Good question, Brian and Kara. Sam hit it on the head. They simply don't. So this was referencing yesterday. We talked about buy now, pay later. I think it was later in the show. Folks, it's not the only reason why we have this, but I got to tell you, when you consider what really is an epidemic in our country of debt culture, this is one big reason why. It's that people are okay with the buy now, pay later mentality. I'll get what I want and I don't have to pay for it. There's something wrong with that. There really is something wrong with that. It'd be far better to buy what you can afford. And so, we said yesterday, rightly, that debt is not in itself sinful. And I agree with that. I'm not contradicting what I said yesterday, but I do want to
You have a brand new opinion today. You never know what you're going to get with Seth.
That's exactly right, folks. If you heard, Social Security on Monday, and then yesterday the Trump stuff, and now it's debt. Here's the deal. Debt can be very dangerous. It can be sinful. It can lead to sinful tendencies. It can be very, very foolish. Very foolish. It can lead to tendencies such as greed, such as envy. You see something that you want, you compare yourself to someone else, they have something that you cannot afford, but now all of a sudden you have a way where you can have that thing even though you can't afford it. That's dangerous. Talk about impatience, talk about folly. All of that can be fostered by this debt culture. Folks, this is a great time as any to remind you that, listen, we don't believe debt is sinful, but we also don't encourage it. Certainly not. If you can help it, if you can buy something, if you can buy a house without going into debt and not having to have an interest payment and not having to succumb to 6-7% interest rates, I would say go buy the house. Don't go into debt if you don't have to. I think that's a really good mentality for us, is we wouldn't call it sinful, but if you can avoid it, it's a good idea to avoid it, folks. It really is. Your greatest asset, we've said this before on the show, your greatest asset is your ability to earn an income. But if you are constantly burdened by debt, that great asset becomes not so powerful. That income that you earn gets the legs cut out from under it because you're having to constantly treat the debt problem. So get out and stay out. I think that's a great mentality. Brian and Kara, appreciate that question. People simply can't move forward because they're constantly trapped in that debt. Let's move to the markets here now, folks. So yesterday, it was, so we'll start here actually. Late last week, it was Powell, and then Monday it was Nvidia. Then yesterday, the markets were a little skittish as Trump was now blazing this new trail with the ever balmy relationship with the Federal Reserve, which we'll talk about potentially if we have time. He announced that he fired Fed Governor Lisa Cook. Cook then responded, by the way, with the threat of a lawsuit against Trump. So you can just imagine if I responded, if I stopped doing my job well here at FISM and the ministry decided to fire me because I wasn't doing my job well, or there was some other potential problem and I was fired, and then I said, I'm going to sue you for that. Just imagine if everybody did that. That'd be a pretty chaotic world, I think.
It would go well.
I think it would, exactly. Well, nonetheless, Lisa Cook is trying that on for size. The markets were keeping an eye on this, but they were all hanging right around the flat line. Keep in mind, they're also eyeing Nvidia for the earnings call later today. Late afternoon, the markets kind of trudged through the flat line. They were poised to finish positive. They made it positive yesterday. The Dow Jones finished up about 1/3%. Meanwhile, the S&P 500 was at 2/5, and the NASDAQ creeping up towards 0.5% positive. So the pre-markets They're muted, understandably. So right now, I can tell you what's exactly happening on Wall Street as we speak. Everyone is waiting with bated breath for their Lord and Savior NVIDIA, led by what we're calling Jensen Huang and his chipmaker gang. So after the bell reports today, all eyes will be on NVIDIA. As of right now, the pre-markets are right around the flat line. They're not moving one way or the other, slightly below it at this point. But that's probably a good guess, is that could be where they stay, barring some other kind of crazy news as they await NVIDIA's earnings report.
I was just going to say, well, whatever the earnings are, we'll find something new to fret about
That's
tomorrow.
exactly right, as the markets always do. Good to be here with you, folks. Make sure to say hello on the chat there. We'll be back right after this break, talking to more financial issues with you. If you've got questions for us, comments for us, put them in the chat. We'd love to get to them as quickly as we can. We'll be back after this.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
FinancialIssues.org offers a variety of resources to support your journey in biblically responsible investing. One of these valuable tools is the Highlights page, where you can explore key moments from the live show.
What exactly is long-term investing?
To simply answer your question, long-term investing is when you have a time horizon of at least 8 to 10 years.
Stay informed with the best moments from the show by going to FinancialIssues.org/highlights.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Financial Issues. We're here this morning. Good to see you guys on the chat. We'll do a quick chat rundown here. George, North Carolina. Great to see you. Some of you sharing your interest rates that you got. George saying you got your house in 1986-87 for about 7.5%. It is interesting, folks. You know, the rates that we're seeing right now, they seem to be pretty standard average for what we saw in the last, say, 40 to 50 years or so. I had made a comment in the chat asking, for those of you who are a little bit older, do you remember how high the interest rates were when you were buying houses? I threw out 12, 13%, and some of you even said it was even higher than that. So I think as the millennials, we kind of got lulled to sleep a little bit with the 4%, 3%, or 2.5% rates that we've seen, obviously before these last 3 years, back around 2020 or so. And so the folks who refinanced during that time, especially young folks, talk about definitionally the golden handcuffs. Boy, that's what it is. You can't leave because it's just such a good rate. It's affordable. And where are you going to go? You know? So that's not me saying that you necessarily should do that. I'm just saying for a lot of people, that's the situation that they're in. Interesting stuff nonetheless there, folks. All right, let's switch gears here, Sam. So Cracker Barrel has been dominating the news headlines this week. And
I've not noticed.
I find it kind of funny, Sam, you had mentioned this in our pre-show talks that we always do. August is tough when you're trying to find news headlines. So yeah, we're going to talk about Cracker Barrel, Sydney Sweeney, other stuff that during the more robust time periods of the year, you're not going to talk about that stuff as much, but this is what we have to talk about here.
Well, you got to remember Congress is out of session. A lot of CEOs are on vacation. Yeah, it's earnings season, but it's a slow time of year. So random news tends to pop up.
But nonetheless, it has dominated headlines, and it sure did yesterday and this morning. So give us the update, Sam. What's going on with Cracker Barrel now?
Yeah, well, they're changing their mind after the backlash about the logo rebrand. But what's really interesting about this is Donald Trump chimed in on the whole controversy yesterday, causing Cracker Barrel shares to pop 5% yesterday morning. Before anything even happened, Trump was urging the company to reconsider the change to its old logo, back to its old logo, saying it would do wonders for the company amid intense backlash. He said they got $1 billion worth of free publicity if they play their cards right. Very tricky to do, but a great opportunity. So I was thinking at the time, why on earth are the markets reacting to this? Nothing has even happened. Trump just gave an opinion, which he does all the time. But apparently they knew something I didn't know, because later that day, Cracker Barrel released this statement. We thank our guests for sharing your voice and love for Cracker Barrel. We said we would listen, and we have. Our new logo is going away, and our old timer, that's the old logo, will remain. Trump then responded with congratulations, wishing them luck, saying he hopes they make lots of money, and most importantly, make their customers very happy again.
Trump really loves the make fill in the blank something again, doesn't he? Make America great again, make customers happy again, that sort of thing. I find that kind of funny. So right off the bat, folks, I think we can take this as certainly a win against wokeism. I think that's awesome. We saw how this rebrand was fueled by woke policies. We've seen this with Cracker Barrel, unfortunately, in recent times, that there was some whisperings of pride-themed rocking chairs, their staple rocking chair that they have. There's pride-themed stuff happening there, all that sort of thing. So I think right away we can take this as a win. I think it's great. I think we're seeing the power that the people have. The voice of, especially this was spearheaded by conservatives saying we don't like this. We like the old. There was nothing wrong with the old time one, and so I think that's great. I say yes and amen to that. Wokeism is bad. The remodel, the rebrand was really not good. And long live Uncle Herschel, right, Sam? I mean, I think it's great. And you know what? Trump was exactly right in his criticism yesterday. The company took the opportunity. They took the free publicity. They, by all rights, admitted that they made a mistake. So this is as close as we'll get to I'm sorry, is by changing back. And I think, when you're talking about, certainly from a biblically responsible perspective, we care a lot more about actions than we do about words. So I think this is great. But what I really want to discuss here, Sam, is something that is becoming more and more of an issue. And it's one that as long-term BRI investors need to be aware of. And as we speak all about this, folks, with Cracker Barrel, keep in mind, we're not promoting Cracker Barrel as a company that you should invest in. We actually issued a sell alert about a year ago for this company. And my understanding is we don't plan on entering back into it. But here's the deal. These companies will pop or drop at a mere word. Sam, it reminded me of one of my favorite hymns written by Martin Luther called "A Mighty Fortress Is Our God." And there's a line in that hymn that says something like, when we're talking about the battle with the enemy, Luther says, "One little word shall fell him." And that's great power, that we have the power in us, that one little word brings down the enemy of our souls. But I was thinking about, one little word from one specific person can either cause these companies to go berserk, or they can have a party. And something about that doesn't seem right to me. It's not everyone. Donald Trump, Jerome Powell, maybe one or two other people have the power with one sentence to cause these companies to go into a tizzy one way or the other. Sam, is there something wrong with this? Am I just grasping at straws here? I feel like this shouldn't be the way it is. All Trump said was that they need to bring back the old logo. And like you said, the stock popped 5%.
And nothing had changed. Nothing had changed about the fundamentals of the company.
Yep. And this was before the official rebrand announcement. Stock pops 5% on Trump's word. Folks,
it's all vibes and hype.
Yeah, that's exactly right. It's all vibes and hype.
Same thing with the Sydney Sweeney ad. Nothing about the fundamentals of that company had changed. Maybe you could argue sales would increase in the future because of that ad. But it popped something, 25% just something because of one advertisement, when the company is exactly the same.
Yeah, that's exactly right. There's really no change there. Folks, I think this is maybe part of the reason why And obviously, when we made this decision a year ago to part ways with this company, we don't have a crystal ball. We didn't see this stuff coming. But look at it in hindsight. Companies that do this kind of stuff, they don't seem to be the best kind of companies that we're looking at for long-term good investing. Folks, this is a tremendous lesson for us not to be swayed with each and every word coming from the mouth of whichever influential public figure says it.
Apparently a top investor in Cracker Barrel got wind of this redesign, rebrand, and he told them, he said, this is a terrible idea. I think the word was folly. He said, you're abandoning what makes you great for the modern winds, the modern trends, and it's just a terrible idea.
Great lesson. That's a great lesson. Is Cracker Barrel was listening to what they thought were the modern trends, going along with the woke stuff, all that. It's a good lesson for us that we can't do that, folks. We really can't. We're long-term. We're long-term investors. The companies that I'm investing in right now with the FISM strategy, I don't plan on, barring a sell alert, barring a BRI violation, I don't plan on ever getting out of these companies. I plan on being in them for decades. And I hope that can be the same model that you follow as well, folks, that we're going to go through ups and downs in the market, possibly bull markets, bear markets, wars, stuff like this.
Good advertisements, bad advertisements, rebrands, Donald Trump sharing his opinions.
Yep, rebrands, all that sort of stuff, the U.S. buying stock into certain companies, all that stuff. We're going to go through all of that, and you just got to stick with it. You have to stick with it. Of course, trust what our experts say. If there's a sell alert, if it's for fundamental reasons, if it's for BRI reasons, that's when we part ways with the company. But if that doesn't happen, you're in it and you're staying in it for the long term, man. Stick with it and stay at it. I think that's so important for us and such a good life lesson for us, not only when we're talking about our investing, but in everything that we do, ultimately in our relationship with Christ, that we continue to stick at it, working hard, trusting that he's doing a good work in us that may take decades before we see the fruition of that. Makes sense, Sam. Hopefully it wasn't too controversial like we've seen the last couple days. I think our long-term audience would probably agree with that. Let's get here, Sam, a quick one. So turning our attention to the White House versus Federal Reserve, continual just soap opera. That's really quite delightful to watch, but it seems as though now Fed Governor Cook's attorney says he will file suit over Trump's attempt to fire her. The latest news I'm seeing here, Sam, is that the Fed is now saying that Trump needs cause to fire Lisa Cook.
And that's the tricky word. That is what the law says.
That's exactly
that
right.
The president can remove a Fed governor for cause.
Yep.
What is cause? What does that mean?
Right. That's what we need to figure out. Sam, you had mentioned what's kind of going on with Lisa Cook. Could you just bring our listeners up to speed on why there's some controversy with her when it comes to fraud?
Well, there's a question about did she commit mortgage fraud? That's basically the gist of it. The DOJ has launched an investigation into this. She's not been officially convicted of anything yet, but Trump is arguing just the fact that there's a question about this, even if it's just negligence, that means that you should not be fit to serving on the Federal Reserve Board because it's the highest financial institution in the land, and you don't even know how to properly fill out financial documents.
That's exactly right. That's a good question. It's almost like if you serve on the highest court of the land and you don't know the definition of a woman. We certainly wouldn't have that in this country, would we? That's a joke.
No.
That's a joke.
That's the Twilight Zone.
That's exactly right. That's exactly right. But it really is interesting here, Sam. I think you're exactly right. We need our Federal Reserve officials to actually know about money. Our founder, Dan Celia, used to say these types of people couldn't manage their way out of a paper bag and they couldn't manage their own lunch money. And I think that's true. I think we're seeing that right here. But nonetheless, the latest news I heard, Sam, is that it looks like this case could and probably might go all the way to the Supreme Court.
I think the Supreme Court is going to have to define what does this mean for cause.
And I, for one, am happy about that. I'm not sure how confident I am in the Supreme Court. I guess I could say I'm cautiously confident in it. What I'm more happy about, though, Sam, is that we'll finally have a rule book that's written. We should have had this since 1913. Apparently we didn't. Now we do. And, you know, the pro-Fed people will say, well, yes, we did. It's that the president can fire a Fed official.
It's just
with
no one's
cause.
ever done it before.
But no one's ever done it before.
So it's very unknown territory.
Right.
So if she shows up to work today, what happens? What exactly happens? Are they supposed to bar her? Are they supposed to just let her keep working while this lawsuit settles out? That's probably what's going to happen. She's going to stay on the Fed until we actually figure out if Trump can do this. But it is a weird situation.
I think to allow due process to happen, what should happen is she should be placed on some kind of leave, administrative leave. I would prefer leave without pay, but if you want to pay her, that's fine. But place her on leave and give this investigation the chance to run its course. Something has to be done here. You can't just let her keep working. And this of course gets back to the question of if the president of the United States can't do it, who can? We got to keep this organization accountable. I know they're independent. I know all that stuff. But there has to be some accountability here. There really has to. So hopefully some accountability comes out of this here, folks. I certainly do hope so. We also saw some news. Real estate experts are now warning of a New York City exodus if Democratic Socialist Mamdani wins the mayoral race.
Yeah, I'm sure those Florida realtors are licking their chops at this news. They're getting excited. Absolutely. Especially because you're thinking these are high net worth people. These are the people that Mamdani is going to target, assuming that he wins. So they're going to want to get out of there. Absolutely. Folks, had a great conversation yesterday with Alex McFarland about this. If you want to go back and listen to it, you can go on to financialissues.org, go to episodes. So it's the resources tab, episodes. No, I'm sorry. It's watch. You go to watch and then episodes. You can click on that, and yesterday's episode should be up there. That was in the second segment yesterday. Interesting stuff here, folks. Nonetheless, hey, if you have to leave us, we hope you have a great rest of the day. But we've got Mark Minnella coming up next. We'll talk about some interesting stuff here for sure. Hope you'll stick with us on Financial Issues. More to come after this break.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
When it comes to money, I always have so many questions. I never know where to go to get answers to those questions. They never really teach you this stuff in school, like some of the best ways to handle it, how to save, when to invest, where to invest, even just what to do with the money. And if I put it in the stock market, what's the best way to protect from losing it all? That fear can be paralyzing. You don't really know what decisions to make. As a Christian, I don't want to give my money to people who are going to use it for things that God hates. When I discovered Financial Issues, it was like a burden was lifted off my shoulders. Not only did I gain access to a simple investment strategy that I can manage myself, I also have the peace of mind that my money will not be going to companies that actively promote things that God hates. Financial Issues has allowed me to experience peace in my investments.
Invest your money in a God-honoring way. Go to financialissues.org.
I just love the first book of Exodus. The king says the Jews are too many. Get rid of them. I command you to kill the firstborn. But the midwives to the Hebrews heard the order, and what did they do? They defied it. And God dealt favorably with the midwives and gave them families. He blessed them for loving life. He blessed them for saving babies. We have re-entered the death cult in this country. You think about how much we elevate death, whether it be the chopping off of parts and we call it transgender care, whether it be shouting our abortion, and you see it so beautifully in John 10:10. It is the divide of the entire scriptures. Now, most people would say John 3:16, but think about it. The enemy has come to lie, steal, cheat, and destroy. I have come to give life and life more abundantly. That's the whole ball game, everybody. It is everything. And we have to have the joy of Jesus Christ to enjoy life and to protect it. It's a gift from above. And Preborn is leading the charge.
Welcome back back, folks. Financial Issues. Good to be here with you this morning. We're having some fun on the show. Let's see if the markets are having fun here, Sam. They're not really. They're kind of pensive, tepid, kind of like I am when I'm waiting for a doctor's appointment in the doctor's office. I don't particularly enjoy myself all that much. The Dow Jones is just above the flat line. The S&P is just below, and the NASDAQ slightly further below than that. So that's what we're looking at this morning. Mark Minnella back with us. Mark, great to have you, brother. Always love having you on the show.
Well, thank you. Honored to be here. This is, it's always fun. It's always exciting. And, every time I come on with you, with both of you, I learn a lot, actually. And especially with the chat room. That's really interesting to see what goes on in there.
The chat
the comments
is fun,
and how in tune those who are part of financial issues are. I mean, it's amazing to me. There's not a lot of shows that have such a good following, intelligent following. I guess godly following would be a better way to say it.
Yeah. Well, Mark, I appreciate that so much. I know our chat does as well. Chat, make sure you guys say hello this morning. It's good to see all of you.
Give some love, right?
We'll do a little chat rundown later on in the show here. But, Mark, let's get to this here. We've had you on several times over the last couple months. You've got decades of financial experience, and we've discussed a lot of topics. I thought to start, it'd be kind of fun. I have some financial questions on my mind. I'd just like to pose a couple of these to you. They've been on my mind lately. I've been thinking through them as I'm moving forward in my own investment journey. I know Sam is as well. So, let's just run through a couple of these questions, brother. Why don't we start with this one? This one says this: I've invested well in the markets for some years and have now reached the point where my investments are equivalent to the remaining total balance on my mortgage. That amount roughly around $140,000. Should I continue to invest in equities and mutual funds while slowly paying down the mortgage, or should I cash out, pay off the mortgage, but also while doing that knowing I'm going to need to start from scratch again in the markets? What would you say to that, Mark? What do you think?
Seth, I've wondered this question myself. I don't have a mortgage right now, but I thought if I did have one, what would I do in this situation?
Yeah. And Mark, I got to tell you, it's kind of an amendment, Sam, with what you just said.
Sam, are you living out of your car?
It's a nice car.
Yeah, that's exactly. It is a nice
It's an 07 Toyota.
Okay.
Mark, I have wondered this also, jumping off of what Sam said there, because I'm doing some investing. I have a mortgage. I'm trying to get that number of the remaining balance that's left off to be equivalent to the investments that I have. And so I'm wondering this as well. What do you think?
Well, it's an excellent question, and it's one that shows why it's so important to balance both sides of the issue, practicality and biblical concepts. One of the things that I think is very important when it comes to finances is always answering the question, what does this mean to me as a Christian? So we have to look at the debt issue in there. And you did a very good job. Several times I've seen you on the air talking about debt, talking about how it's not a sin, but it can lead to sin. But it is a warning. And I don't know, when the God of all creation gives me a warning, it's something I need to take very seriously, So, but the other part about this is that when it comes to, if this is you, Seth, or if this is somebody else's question, it comes down to your relationship with God in this. What do you believe he feels like? Is it considered a debt if you have an asset that's worth 2 times as much as what you owe on it? Is it considered a debt if you have other assets, liquid assets, that could pay it off at any time? I'd say yes, it's still a debt. That's the debt part of the formula, but you have it covered. It's backed by an asset. And that's what's unique about the mortgage that the debt in the Bible didn't talk about. The debt in the Bible usually talked about, hey, I can't feed my family. Can I have some food? Can I have some money to buy some food? And they say, sure. And if you don't pay it back, you become my slave for 2 years. And you work for free for me for 2 years. And some people would say, that's great, because then I could feed my family too. Right. But that's what the type of debt of the Bible was about. A mortgage is a little different when it has an asset back in it that generally is of the same value or more than the debt itself. Now, we had to take into effect liquidation and costs and attorney fees and all that. But some people would say, well, Mark, I feel very comfortable. I have enough in my 401k or I have enough in my savings to pay this debt off at any time, but I'm earning more than what it's costing me after my tax deduction. I'm actually making money by keeping my investments and not paying my mortgage off in full, just making payments on it. So from a mathematical, practical perspective, it makes sense not to pay it off. In fact, many of my clients, what they did was they would set aside an investment fund to manage it so there's liquidity in there and make it easy to be able to make the payment and have their payment automatically come out of that investment fund. And then at the end of every year, they'll say, I got more money in my investment fund than I started with, or my investment fund went down a bit, but I'm still better off having done it this way. So from a practical, mathematical, real world perspective, it makes sense to keep it invested. From a biblical perspective, when I say it's between you and God, I really mean this because with debt, it's not a sin. It can lead to sin. It can lead to foolishness. Like gambling, it can lead to addiction where we're circumventing. The worst part about debt that I see that the Bible explains to us is it presumes upon the future. If you borrow money to buy a car and you don't have enough money to pay it off in your savings or investments and you lose your job, you lose your car. The same thing's true with your house. And it goes beyond that. Think about this. I have one client that I know of over the years. They were adamant about debt, no debt. So when they took out a mortgage, they paid it off as quickly as possible. And this was near their retirement. They had very little left over, and they had some medical issues, so they had no money for that. They also had some structural problems happen with the house, and they couldn't repair it. They could not get a loan on the house because of the structural issues. Nobody would give them the loan. Nobody would allow them to borrow against it. They did not have their own money to fix it. So effectively, they had to sell the house at a serious discount and actually move into an apartment.
Wow.
I mean, so that they presumed upon the future in more ways than one. Yeah. So here's some thoughts. Before you go and pay off your house and take all your money, make sure you have a moat around your castle. You've heard me talk about this before. Make sure you have money that is going into an emergency fund to carry you if things don't work out. And make sure you have revenues replacing that on a monthly basis. You've calculated your monthly expenses and your occasional costs, and you loop that in, divided by 12, and you're putting that away every month for those emergencies. Then, if you still have the money, plenty of money to pay off your house, and you're totally convicted that this is a type of debt that the Lord would not want you to have in any way, shape, or form, I say go with your instincts with the Lord before anything else. Your sleep factor with the Holy Spirit, Otherwise, from a world perspective, and even slightly biblical, if you have the assets to cover this comfortably, let's say you have 2-3 times more than your mortgage in your investments and whatnot, you could set aside some in safer investments, more liquid, that would allow you to pay off your mortgage a little bit at a time, make your payments out of that. So effectively, you have taken the money, set it aside on your mortgage, but not paid it off because you're earning more than it's costing you. Or if you wake up one morning and you had a dream and God said, pay off your mortgage, then do it.
Mark, I'm glad that you said that. Did that make
sense, or was that too wishy-washy for you? It
really does. So what I'm getting from that, because the question asks, once I hit that exact mark of, they threw out the number of 140,000. So if I've got 140,000 in investments, 140,000 left off, what I'm hearing you saying is it would be good to seek the Lord in all of this, but might be better. It might be better to have a goal. Yeah, it might be better to have a goal that's a little bit higher than that one, where you've still got some kind of cushion there, where it's not all your investments that you're sinking into the house. You still have some investments. So maybe a better goal would be, once I hit twice the amount or 3 times the amount, maybe that's when you can start asking those questions.
Yeah, those are arbitrary, but the thing really comes down to your conviction on debt. Yeah, between you and the Lord first and foremost, and we got to be there. But remember, when you pay off your house, you're not done paying on your house. Right. You have repairs, you have taxes. Yeah. There's all sorts of things that come into it that you have to make sure you have the income to take care of. So if you take all your retirement money away and you retire, how do you make those payments? How do you do those things? So I I think God wants us to be wise on this. I do believe that he warns us over and over and over again that not to presume upon the future, that your income is going to continue or everything's going to go right. Your house is going to stay sturdy, or however, you have insurance payments you have to make. There's a lot of money that still has to go into your house afterwards. So make sure you plan for that as you pay it down. And again, if you have this money set aside over here that is more than your mortgage, and you're paying your mortgage out of that, and it's in fairly safe or in liquid assets, and you're making more than the mortgage costs, at any time you could pay it off when the conviction or the economic situation scares you into doing that. But at the same time, you might be making a little more money to help keep the house up, help keep the value up, help pay the taxes, help pay the insurances.
Mark, it's great, brother. Folks, talking to Mark Minnella here. We got more questions, Mark, but I think we're going to have to wait to the other side of the break to get to them. Hey, quickly, folks, we don't have the Ag Report today on the live show. However, you can get the Ag Report on our website. You can hear for our farmers and ranchers, Craig Halgren's great words there. Should be up after the show. So just go to financialissues.org and you can go to let me see here. I believe it's under the show. We'll get that exact link there if you get the Ag Report. Come on the other side of this break. More financial issues coming up right after this. Stick with us.
Most people have no idea what their money is funding. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. We equip believers to manage their own portfolios, offering research-backed asset allocation models, biblically responsible stock recommendations, and practical guidance. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Great to have you all this morning, folks. It's been a good show, and I'm delighted that each of you have taken the time out of your Wednesday to join us here. Hey, make sure you check out the partner commentary. We've got new commentary up if you are a partner. If you're not one, you can become one right now. It'd be a great thing for you to do, folks. If you're listening to the show and you're wondering what we're talking about with all this stuff, become a partner today at financialissues.org. Just click that Become a Partner button when you go to our website there. Speaking of the website, the Ag Report is under the Learn button. So if you're at the top page of the website, hover over Learn, you can go down. Agriculture Update is right there. So you can click on that and you get today's Ag Update. Let's say hello to some people here in the chat. We've got George saying hello. Hi, George. Nice to see you. Ann as well. Other George in Bethlehem is saying, isn't that the truth? Even paid off, you never really own it as long as you have to pay taxes on it, technically. George, isn't that true? We were just talking during the break about that awful legalized thievery known as a property tax. Income tax isn't so great either, but property tax as well. not too much
See if Ron
fun.
DeSantis has his way down in Florida.
I hope so. Hopefully we can see that precedent spread there. Let's see. We've got Lisa. Good to see you there, Lisa, in the chat. Sam is talking about, Sam, I like that steady diet of government cheese. That's a good deep cut there, you and Brian. Nathan, good to see you as well. Claude. Hello, Claude. And Stephen from Oklahoma. I know we also had, yesterday in the chat, we had Mitchell. Mitchell, that was the first time I'd seen you in the chat yesterday, so make sure to say hello if you're watching this morning, brother. And then we also have, I wanted to give one more shout out here. Debbie from Kentucky. Good to see you, Debbie, as well in the chat. So many of you on this morning. Apologize if I missed you, but make sure to say hello otherwise. Mark, let's get to another one of these questions here, brother. So this one says, what are the benefits and drawbacks to investing in mutual funds versus regular equity investments? And how might I know which one is right for me?
Good question. The benefits, a mutual fund, the basics of a mutual fund is it's like a bucket that a bunch of people pour their money into, and then a manager will go in and take that money and invest it. So let's just say it's an equity growth fund. So you might have anywhere from 20 to 200, believe it or not, stocks in this bucket, depending on how it's managed. And you own a share, a fraction of each share that's in there. So if there's $200 million in there, and you have a little bit of money in there, whatever your money comes out to as a fraction of 200 million, that's how much you own of each one of these shares. So you're getting diversification there. One of the key components that we talk about here are that you've heard Seth and many others talk about with our asset allocation models and whatnot. So you're getting the diversification, or some diversification, depending on the type of the mutual fund, at least in multiple issues of different stocks. So that's one of the benefits of it. The downfall is usually you have a lot of expenses with mutual funds. Some mutual funds have some very high expenses, actually. And depending on the type of share, you could pay upfront costs, you could pay back-end costs, you could pay ongoing monthly costs, along with all the internal expenses of the trades and the management fees and all that kind of stuff. So it can be expensive. That's the major downfall of it. Also, there's things like capital gains, which don't seem fair. You could get into a mutual fund mid-year and have to pay a lot of capital gains, even though the fund went down because of the trading from the managers in there. So that's an issue, some tax issues there. But mutual funds can, in general, be a good way to start investing. However, I would take it a step further and say, move to exchange-traded funds, which are like a mutual fund, but they don't have the same tax issues, and they're traded openly on the market, where a mutual fund is traded at end of day. If you went in to sell off your mutual funds today, like at 10 a.m. this morning, they do not sell off until after the market and the value of all the stocks and everything in that has been posted and put down. So you have more flexibility of being able to buy in or buy out at any time and knowing what you're going to get for it in an ETF. You don't have the same capital gains issues, and usually the expenses are a lot lower. So you get the same concept of a diversification in an ETF, exchange-traded fund, that you would in a mutual fund. Now compare that to individual stocks. Individual stocks, you can go in and buy as many as you want, or any kind you want, so you're not limited to that manager. You can manage them yourselves. You can make sure that every one of the stocks that you're a participant in through ownership is clean and honoring God. Is not grieving the heart of God because you're involved in companies supporting abortion, pornography, and other things, like in many mutual funds. There may be 70% of the stocks in there clean, but 30% dirty. And, how much dirt do you want in your portfolio? So it makes it easier to be biblically responsible. You also can thematically make your investments match your lifestyle and your asset allocation that way. The issue with individual stocks is the cost of them. Buying a share a single share of a stock generally isn't that great of an idea. I know there are many brokerages that allow you to do that, but you usually don't get the best price when you buy it or when you sell it. You usually need a little bit larger lots for that. And if you needed 20 to 40 different stocks and the average stocks was $100, you have to make sure that your portfolio can handle that. And you don't, so getting the diversification for smaller accounts is hard to do with individual stocks. So the diversification could come from ETFs. In fact, one of the ways some people do it is they use an ETF for a broad brush of, let's say, small cap value funds or large cap growth funds. Yeah. And they find one that is clean, like some of the Timothy Plan ETFs, or there's different ones out there. So you could use those, mostly Timothy Plan. I trust them in their screening more than anybody else.
Same here.
So you could use that as a broad brush, but then you could go and say, okay, but technology's just for the last 4 or 5 years, 10 years, however you want to look at it, has gone through the ceiling. So I want to own a couple of stocks in technology to kind of overweight that segment. So you could use the ETFs as a broad brush for your general allocations, and then you could use an individual stock or two to overweight those areas. So the positive aspect of mutual funds or ETFs, let's stay with ETFs because I don't like the tax or the expenses of most mutual funds. Yep. Let's stay with ETFs, exchange traded funds, is that you get the diversification all in one place, they trade like a stock. Then the positive aspect of stocks is you can build your own asset allocation if you have enough money in the portfolio to supply the 3%, 10 stocks at 3% in 12 different economic sectors.
Mark, that is awesome. Folks in the chat, I know many of you who are partners, you're either investing in our regular model, which what Mark was just talking about would be much more heavily invested in stocks, or you're in our what we call the fund model, which is more heavily invested in some of those other ones, exchange-traded funds, mutual funds. Let us know how your experience has been with those. Maybe you've got a little bit in both there. Mark, I'm so glad that you mentioned Timothy Plan because I agree with you. Timothy Plan's got those options, and boy, we can trust them for biblically responsible investing.
And Mark's exactly right about the fund model, ETFs being a gateway into learning how to invest. That's how I learned years and years ago how to navigate my brokerage, how it worked, what does it mean to be designating money into these different funds. So I think he's exactly right about that. It can be a wonderful entry point.
That's great. Hey, Mark, we got a follow-up question on the chat there. James from South Carolina is asking, what about so-called active ETFs? Do you have anything to say about those?
Yeah. I saw that in there, and I'm really glad you asked that. Yeah. The difference between active and passive is kind of like the difference between investing in an index, which has a set of stocks in it, and they don't really change unless the index changes. And active means they're looking at the economic situation, they're looking at every asset class and comparing them to one another, and to the broad market. They're managing it on a list of criteria to help overemphasize certain industries and or sectors and or asset classes over others. Some of them do very well, some don't. The issue here is keeping up with that active management as they exchange in and out stocks that may or may not be clean. So what you need to do is make sure you're checking in with evaluator services on a regular basis, at least quarterly, and screening those active managed funds so that you know that you're not compromising your biblical investments.
That's great, Mark. And by the way, folks, if you want that evaluator tool, you can grab that on our website under the resources tab. That's the fourth one down. Mark, I enjoyed our conversation today so much, brother. I needed to give one more shout out in the chat here. Alan from... Is that Mississippi, Alan, saying hello? Alan, good morning. I think I either missed you or have not seen you in the chat before, but boy, it is great to see you there this morning and so many of you as well. Mark, I appreciate our conversation so much today, brother. We're out of time here.
It's over already?
I know. It goes by so fast. Time just flies when you're having fun. Or as I like to tell my wife, time's fun when you're having flies if you're a frog. So anyway, that's my joke for the day. I think with that awful dad joke, we'll have to sign off for today.
Sam,
Mark,
get him under control.
Yeah, there you go. Sam's got to
do my best. Yes, it's very difficult. That's what they really pay me for.
That's right. And they pay the big bucks, don't they, Sam? Boy, great to be here with you folks. Mark, appreciate you, brother. Thanks so much for joining us.
Thanks for having me.
Again soon. Yep. Folks, keep in mind, everything you have belongs to the Lord. Let's be found good and faithful stewards with it. Of course, tomorrow we'll be back. We got an NVIDIA earnings report to talk about. Any of what's going to happen with the Trump versus Federal Reserve saga that we've continued to see. We'll be keeping an eye on those things as well. Hope you'll join us again tomorrow for financial issues. Until then, remember, it's all His. Let's be found good and faithful stewards. See you next time.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.